I've had a drink. Hopefully the voice will hold out for another while. This particular presentation is one that I originally put together in 2011. That's 15 years ago. And I put it together for a set of regular investors, not traders. It was actually the stock market group at a U3A Manningham group in Melbourne. And I'm going to skip through some of these slides because they are more relevant to the investors who are not that sure about the market and don't really believe that technical analysis is useful. So I'll skip through some of these. And there's something in this particular presentation about blue chip stocks that I want to focus on, which makes me wonder if many of you are followers of blue chip companies or like to favor blue chips, or maybe your stock universe comprises blue chips.
Yes.
A lot of the investors that I was talking to 15 years ago were of the mind that blue chip stocks are what they should focus on and buy some of those and just hold them long term. And I tried to tell
Here's a good
them
one.
that's not a good idea. Here's the same disclaimer. So the next couple of slides out of this presentation focus on blue chip stocks and how they can be disappointing. And that's before the CSL episode in the last few months. Do we understand what the term blue chip really means?
No, not really.
When I first prepared this set of slides, I had a look at the ASX website. They've got a glossary of terms, and they said that a blue chip company was not what I've got on the screen here. It was actually more verbose. And after the GFC, they cut it all back, and now this is what's in their glossary. Does that tell you much about what a blue chip company actually is and if it's worth following?
Okay.
Maybe. Uh, has anyone ever seen a list of blue chip companies?
I think it used to be like certain market cap size, used to be, but yeah, now it's
Is it the top 20 or not?
So, I mean, no one knows.
yeah.
Okay.
Sounds
Pretty open.
It's just volatile as small caps.
Yeah, now they are.
I've never found a list. I've asked brokers over the years. They've never had a list they could give me.
Ask me in 10 years and I'll tell you.
As far as I'm concerned, there is no list. And when I finish showing you these slides, I might convince you that it's not even worth looking at a company that's called blue chip. Anyway, let's go through them. Why hold blue chip stocks? I've asked investors that. And there are a few reasons why they might hold them. It might be dividend income or capital growth or franking credit tax deductions, regardless of how the share price performs, mind you. Skip through these. Here's one example, AMP. Now, this chart focuses on 2008. And back then, AMP might have been considered a blue chip stock. It was trading up around $10.50. It fell 64% over 78 weeks. Now, that was during the GFC. The GFC peak, the market top, was about October, November 2007. So it fell in line with the rest of the market. After 14 years, what was the share price? It fell to $4, recovered to nearly $7. Here it is, a few years later, down around $1, $1.08. So if someone bought AMP back near the market, near its top, and tried to hold it, then 90% of the value of their share has gone. I'm having flashbacks to when I did a presentation like this to the Australian Shareholders Association. just after the GFC. There were 60 of them in the room, and I could see most of them was shading their eyes and not looking. They didn't want to know about it. Here's CommBank. CommBank back in 2007 and 8 before the GFC. It fell 60%. It rallied to nearly the highs of the pre-GFC, then sideways. After 5 years, it made new highs. That's the GFC top. Made new highs. Took 5 years. So in hindsight, was CBA worth holding over that period? I don't know. At least 36 well-known blue chips fell more than 50% during the GFC, and 3 years later, most were still below their highs of 4 years previous. Question, how long does it take a blue chip stock to recover from a bear market fall or a correction? There's no single answer to that, so don't try to think of a figure. Here's a few slides just to put it in context. Amcor, 16 years, fell from over $10 in the 1990s. Fell 53%, recovered nearly a bit over halfway, fell again. And when I took this screenshot in 2011, it was still 30% below its peak. Back then, Amcor would have been considered a blue chip. AMP peaked, still down after 10 years in 2011. ANZ Bank, in 1990, it made a peak of about $6.20, $6.30. It fell, was up, fell, was up, fell again. After 5 years, more than 5 years, it made new highs. That's talking about locking your money up and going nowhere for a long time. Here's CSL. Back in 2002, it was about $17, fell to $4, and after 4 years, made new highs. And we won't look at the current value of CSL, the share price. It might scare you. Foster's took three. Foster's was a blue chip stock. Took more than 3 years to make new highs, and then went nowhere for 6 years. Telstra. Did anyone happen to buy Telstra during the first float, T1 or T2?
T1, yeah.
That's about
First
T2.
one was all right.
About
But not the second float.
$6.50. Got up to over $9 and fell. In 2011, when I took this screenshot, it was $2.94. What's Telstra trading at now? $5 something.
About 490 something.
So it's still down here.
Yeah.
Well below the initial float. Westpac Bank took 7 years to make new highs after that peak in 1988. Woolworths took 3 years after peaking in 94. Woodside took less than 2 years to make new highs. This is in 1987, 88, 89, well before the GFC. So when I started looking into this and the performance of blue chips, I thought it might take only a couple of years, or maybe it takes years for some blue chips to recover. So based on that, I decided years ago to stop thinking about blue chips. Just ignore the fact that anyone talks about blue chips and focus on other things. Talking about blue chips was a waste of time.